Hey everyone, welcome back to FinTech Talk, where financial trends and tech news collide in the most exciting way. Today, we're diving into the fascinating world of the stock market. Buckle up, because we're about to take you on a wild ride through stock exchanges, investing, and more. All right, let's get started with a fun scenario. Imagine you've just launched a company called Banana. And no, we're not talking about fruit. Banana sells batteries. Because clearly, nothing says innovative tech quite like banana-powered devices. Your batteries are flying off the shelves and suddenly you're in a jam. You need cash to buy high-tech machinery, but your friends and family can't help out anymore. So what's your next move? Enter the angel investor. These folks are like your financial superheroes. They give you the cash you need in exchange for a piece of your company's profits. For example, if you make a deal for 10% of Banana, you'll be sharing 10% of your profits with them. It's a win-win, but you've got to give up some of your pie. But the story doesn't end there. Your company's growing fast, and now you want to take Banana nationwide. Angel investors can't cover this kind of expansion, so you bring in venture capitalists. They're like angel investors on steroids. They buy shares of your company and help you reach new heights. So you've struck deals with both angels and VCs, giving away 10% to each. But if you're aiming for the big leagues, it's time for an initial public offering, or IPO. This is your chance to sell shares to the public and raise serious funds to take Banana global. Going public is no small feat. You'll need to meet specific requirements like financial benchmarks and company performance metrics. With the help of your financial advisor, you'll decide how many shares to offer, at what price, and how much money to raise. Once you're public, your share price reflects how the market views your company. Now, where does all this trading happen? Welcome to the stock exchange. It's like a gigantic marketplace where shares are bought and sold. In the US, we have two major players, the New York Stock Exchange, NYSE, and NASDAQ. First up, the NYSE, established way back in 1792. That's right, it's the oldest and largest stock exchange in the world, with a whopping $30 trillion in market capitalization. It hosts about 2,400 companies, including giants like Walmart, AT&T, and Visa. And then there's NASDAQ, the high-tech powerhouse founded in 1971. It's the largest electronic stock exchange, with a market cap of around $23 trillion. NASDAQ is the go-to for tech and growth-oriented companies, including big names like Apple, Google, and Amazon. Now you might be wondering, who keeps all this in check? That's where the Securities and Exchange Commission, or SEC, comes in. Think of the SEC as the referee of the stock market game, ensuring everything runs smoothly, fairly, and transparently. They enforce laws, set standards, and protect investors like you and me. Next, let's talk about stock market indices. These are like report cards for the market. They help us gauge how specific groups of stocks are performing. Here are some major US indices you should know about. First, the Dow Jones Industrial Average. It tracks 30 of the biggest, most influential companies, and it's price-weighted, meaning that companies with higher stock prices have more impact. Then, we have NASDAQ Composite, which covers over 2,500 companies, with a focus on tech and innovation. It's a market cap-weighted index, meaning it reflects the total value of the companies listed. The S&P 500 is another big player, tracking 500 of the largest publicly traded companies in the US. It's also market cap weighted and gives us a snapshot of the overall market health. And don't forget the Russell 2000, which tracks 2,000 small cap companies. It's great for understanding how smaller, growth-oriented companies are doing. Finally, let's talk brokers. These are the intermediaries who help you buy and sell stocks. They offer different services, from full-on investment advice to just executing trades. Brokers get paid through commissions, fees, or spreads. Some popular ones include Charles Schwab, Fidelity Investments, and Robinhood. So there you have it, a whirlwind tour of the stock exchange, market indices, and brokers. If you found this video helpful, hit that like button, subscribe for more financial insights, and leave your questions or comments below. What topics do you want us to cover next? Drop them in the comments. Let's get the conversation started. Thanks for watching, and see you in the next video.